Hello, everybody. Welcome back. Hopefully, I will be publishing this uh, right away. So, just one day after the last video. So, as promised, here is a full view on how the portfolio is looking right now. Many topics I want to cover today. Okay, first we do a portfolio update, and I'll, I'll tell you why I changed my investment strategy. So, let's go for it. So, as you can see in the last months, a lot of stocks have left my portfolio. I'm concentrating and I've put more money in the last 3 months, okay? But still we are down. So in terms of the portfolio value, after all the COVID-19 situation and the crash that the market had and then the recovery, my portfolio in dollars is down 13%, okay? If I have into account the euros, as the change in the dollar euro is today, it would be 12%, okay? And as you can see here, I've added some investments in index funds in the S&P 500 fund on a taxable account, which is up 10.8%. I started this around the March timeframe. And another S&P 500 fund I had in my retirement account is down 5.8%. So roughly in all of the investments, I'm down 11%, which is not bad, but could be better, okay? So the biggest losers, okay, here has been real estate, okay? EPR properties, for example, it was as low as 75%, okay? And I reinvested more money, as you can see right here. I purchased 300 additional stocks, okay, at a price of $23 and another 45 here, when the rest of the stocks I bought were at a price of $77 roughly. So down pretty much. Okay, it's right now at 23.72. The other one was Simon Property, which reached the point where I was losing around 56%. I also invested in the last month, okay, as I showed you in the last video. And the other one is Store Capital, which I haven't invested in the last 2 months because I don't know the company that much. And I'm just going to wait for it to recover as well as SPG and EPR. So interesting thing to look at here, EPR at the time of buying or compared to all the money that I have invested was 16% of the portfolio. And because it has gone down in value, the current with balance is 10.5%. And something similar occurs to SPG. It was 13% and now it's at 9%. So lots of losses, unrealized losses yet there, okay? And well, my current value is even lower than it was at an all-time high. At an all-time high, I think I was at 110 100 euros. And my dividend estimated has gone up because supposedly EPR and Simon Property will keep their dividend. And right now, EPR is giving a 19% yield and SPG is giving a 16% yield. Store Capital is 8.9% yield, but I don't think that is going to continue for a long time. We'll see what it happens, okay? Let's see how the dividends went in the past months, okay, just to show you. So this is the graph, okay, of the monthly income. And overall, the month of December was the highest one. But the month of February was also very, very good, okay? Or the month of March, I should say. So in March, I got paid 384 euros, and in April, just 165 euros. So not bad, okay? But overall, and the purpose of this video is explaining why I'm changing the strategy. And what is going to be my strategy from now on? So I've decided for the new investments that I do in the following months, the cash that I earn in the following months, I will be allocating 70% to index investing and 30% to this stock portfolio. Okay. And from these stocks, I'm going to be keeping in the long term Apple. I'm going to be keeping Dell Technologies. I'm going to be keeping Google. I'm going to be keeping Microsoft. Probably I will enter again in Tesla. I don't own any share now. As I said in the last video, I bought and sold all of the stocks during April, and I got a pretty good benefit. But I got pretty scared with the plunge in the oil prices, and I thought in a fast reaction, I thought that it was going to hurt Tesla or the electric movement to have a low price in the oil, but maybe I am wrong. I mean, I cannot say for sure, but if the stock goes back to the range of $500, I will get back in, and I'll think about it in the next weeks if I get back in even at the higher prices than $500. So nothing is written in stone, okay? But it's a stock I'm going to be watching in the long term, as I have been doing, and I might get back at some point in time. And I will keep also VMware and keep it in the long term also. So why the change in strategy, okay? So main points about this. First of all, taxes, tax efficiency, okay, and difficulty to recover the double taxation that I'm getting with the dividends. So from here, let me go back to the portfolio. This amount that I'm getting earned every month is after subtracting a 30% tax that I get hit because I am a foreign investor. I am not based in the US. And all the stocks that I'm investing in are US stocks, okay? So from this amount that I'm estimated to be gaining every month, I mean, some months will be higher, some months it will be lower. This is just an average. I'll get a hit of 30%, okay? And it's not as easy as I thought to get back that money. And it's at least 1 year that those taxes are going to be in the power of the country that is charging them, the US, okay, and my country. And just to give you an example, okay? So right now at the current levels, we could say that in a year, I will be getting 5,000 roughly. If we think of the end of the year, maybe I would be getting $6,000, we could say, okay. So of those, $1,800 would be out of my pocket, okay, and not reinvested in the portfolio, okay. But if I look at the longer term, and my target initially with this investment strategy and this channel was to reach around 30 to 40,000 euros in dividends, okay, each year. Let's see, to try to live off of the portfolio, okay. If I'm not wrong with the math, okay, 30%, it would be $12,000 every year that I'm not reinvested in the long term, and I'm taking a lot of time to try to recover 15%, which is the percentage that I would be able to reclaim because of the agreement that the US has with Spain. But I have been studying how to do it, and it's not that easy as I thought or as straightforward. So that's the first thing, okay? This money every year or every month reinvested, it would give me much more revenue in the long term than following the strategy of dividend investing. This is my point of view, okay? I'm not saying this is the most correct way of investing, but from now on, I will be focusing more on index investing, which allows me not to to realize the dividends every month and automatically have them reinvested. So I won't get hit with that taxation because my goal in the long term is not touching this amount that I have invested, okay, and let it go and let it run and let it reinvest every time. So with this strategy, it's less efficient to be getting paid every month with dividends and getting taxed and not being able to reinvest this money. And $12,000 in a year, it's a lot of money. Second reason, the challenge of stock picking. Okay, so as I have been showing you, I've been picking quite a lot of stocks. At one point I think I had 25 stocks. Right now I'm at 16, and I will be reducing this as I earn some gains from this and I sell the other stocks. Okay, like for example Abbott Laboratories or 3M or Pfizer. Okay, I will sell those. And some stocks have behaved in a good manner, but at some point in time, I was losing 75% with EPR, and I'm not sure what is going to happen in the following months. And I don't know what is going to be the situation with the lockdown, if these rental properties are going to be able to open again, the tenants, and earn money and be sustainable. And if people are going to be going to these leisure and recreational properties or at these big malls and cinemas, all of this. And with SPG, I was losing at 1.56%. Okay, so it's quite difficult. With index investing, and let me show you a graph. Okay, this is a graph for today for the S&P 500. But if we go to a 5-year trend, okay, it's much more stable. Okay, or if we go to the last like 6 months, okay, this drop from a highest point to the lowest point, it was a 30%. So it was nothing near a 75% or 56%, okay? And then it has recovered, okay? But none of these stocks has recovered. I mean, they are still at almost the same point as the lowest point, okay? Or close to that. So it's difficult to understand that with an index investing in the long term, okay, you are cleansing the winners and the losers. The winners are staying in the index, and the winners that are out of the index are coming in, and the losers are getting out of the index. Okay, so it's much more predictable. It doesn't mean that in the future the graph is going to be like this, always going up and up and up. It could be like I am at this point maybe for 10 years. Who knows? Nobody knows what is going to happen. But pretty much most of the stocks will be like that. So it's more difficult even to choose the best stocks, to pick the best stocks. Okay. Third point, why changing the strategy? Overall lower costs. Okay. Again, taxes play a great role because right now with Revolut, I don't have costs of investing other than keeping the premium account for 1 year, which is roughly 130 euros a year, to do all the sales and the buys of stocks that I want in a month. And with the option that I have in Spain to invest in low-cost index funds, I'm paying a lot more than what you pay in the US, but I'm paying roughly 0.4% of all the money that I have invested in index fund through a year, okay? And the fourth point, and is an important one also, less time required to manage this kind of investments. Okay, and you will be happy about this, more time to produce YouTube content, more YouTube content. So, well, the portfolio has just updated, and when the market is open, and right now it's still open, it goes like crazy, so sorry about that. It's not the same managing 16 stocks and studying them than managing, for example, 4 or 5 stocks and then managing an index fund, okay? So it consumes less amount of time focusing on the investment. So less amount spent on that, more amount of time that I have to continue with this project and other projects that I want to do, okay? And my free time also, it's important, and it stresses me also less, okay? The less time that I have to look at the stock charts and the stock prices every time, or reading through earnings calls and earnings reports, the less that I am stressed. Okay. So final point for this video: why I went back into Tesla and why I will get back in the near term. Okay, probably, most probably. So I just changed my mind with how the stock went in the past. Okay, if we go and look at the recent behavior, just today is going up 10%. So I entered Tesla around 2018, okay, at a price of $190, okay, and I sold when the stock was at $240, something like that. The dollar was very cheap compared to the euro at this point in time, okay, and when I sold in the middle of 2019 or at the end of 2019, sorry, it was around September, something like that, when the stock was at $240. I earned some money. And then the stock went up like crazy, okay, until it reached $968, okay. Then it dropped. It has this drop with the start of the coronavirus, okay. And then it has recovered like crazy, which is when I invested, okay. I bought at a 490, I think, something like that, and I sold at $700. And I'm not sure what will happen in the future, okay? But the message is that in the last 2 years, I wasn't patient enough. I saw during 2018 and 2019, the stock wasn't moving, okay? So my money wasn't moving, and I should have been more patient. And when you decide to buy a company, if nothing bad happens, you should keep it for 10 years, okay? This is my purpose. I'm not sure I will be able to stick to that, but I will do my best. And I continue to study, and this is interesting statistic. This is the market share of US luxury car for 2019 by major brand, it says. And look at this. It's not electric vehicles or anything. It's the whole luxury car market share. So we can see that BMW has a 14%, Mercedes 13%, Audi has a 13%. Sorry, Lexus, Audi has a 9%, 9.8%. And then Tesla comes here with a 9.7%, very close to Audi Volkswagen Group. And this is not only electric vehicles, this is all the vehicles, including the gas and ICE combustion engine vehicles. So right now it's not about comparing how many electric vehicles Tesla is selling, or if Audi in some country with the e-tron is taking some market share or whatever in a specific month. This graph is like crazy that Tesla is competing head to head with these brands in the US against their ICE combustion engine cars, okay? And it makes a great point that maybe even with the plunge in the oil prices, maybe the market share will continue to go up for electric like the fastest it has gone. And maybe it's a good idea to come back to the stock and keep it for the long run, okay? So this is all I wanted to share with you today. For anybody that leaves a like, thank you a lot, because it shows that this channel is interesting and useful for you, okay, and it can help you learn as I am learning also with this path in investing, and makes me happy to continue posting new videos. So if anybody leaves a like, thank you very much, honestly, because it helps me continue to grow and continue to do more videos. So that's all for today. I hope you take care and are safe. And I hope that your investments are going good and you are not suffering in these times. So thank you again, and everybody take care. Bye-bye.